Risk management is one thing that all successful traders have in common. I will explain what we mean about risk management. Risk management takes various forms. First of all, it is very important for you when you're starting with your trading plan to determine beforehand the percentage of your bankroll that you want to be risking per trade. And as an example, I am not risking more than 0.4% per trade. And in some occasions, I'm going even lower, such as 0.2 or 0.3%. This is totally personal and it has to do with the psychological effect that a loss would have on me. You might be different in that regard. So this is number one of risk management. It is to determine how much you are willing to risk per trade from your whole balance, percentage wise. And as I show in my premium server, where I highly suggest that you go ahead and enroll by clicking on the link down in the description or on the pinned comment in the comment section. I teach you how to build a trading plan and how to identify what would be working for you the best. Now let's move forward to number two. Let's say that we have determined that I'm willing to trade 0.4% per trade. Now the thing is, and this is a trade that I have called in the premium courses, by the way, it is still running. Of course, you can close partials right here and manage it however you want. And this brings me to the second point, which is determine where you want to be closing your profits. And this has to do a lot with your own psychology and your own backtesting. As an example, personally, I feel way better when I'm closing partial profits in previous areas and then I'm letting the rest of it run. But what constitutes a previous area for you is something different. For me, let's say it might be over here. In this occasion, it's only a 2.7 to 1 reward to risk. For you, you might be closing partials right here at 4.75 to 1 reward to risk. Others might not close partials at all, and you might manage your position by bringing the stop loss to break even, let's say once the position has already gone to 2 to 1 or 1.5 to 1. These are things that are absolutely up to you, and these are all parts of risk management. So for example, you might have seen from your own backtesting that if price goes to 2 to 1 and then reverses, it is very likely that it's gonna throw you out of the position. And then you manage your risk by bringing the stop loss to break even. Okay, then you have a risk-free trade, and then maybe you want to target this area right here, and you are absolutely risk-free. Or another part of risk management is that you may want to just compensate for those commissions, your broker's commissions, so probably you want to place your stop loss into the take profit area just a little bit so that you can compensate for those commissions. And you might be thinking that this is ridiculous and it doesn't make any sense, but let me tell you that in 100 trades, if you are opening huge standard lots or whatever account you might be having, it doesn't matter. If 100 times the trade comes and throw you out, let's say in the last 200 trades, then you have made the commissions of the broker. And let's say that your commissions are $17 per trade or euro per trade, then this means that in 100 trades, this is 1,700 euro. So these things, those details actually absolutely matter. If you think that they don't matter, then you have to rewatch this video again and again in order to understand why those things matter. $1,700 in your account would have been too much to cover for future losses or for losses throughout the way. This thing will compensate for lots of trades. And all of those that I talked about right now, I include into number 2 of risk management because they belong to the same category. They have to do on how you manage your position. Another thing, for example, that you might be doing is you might be placing your stop losses above the highs that are being formed in this occasion. So if we make more highs right here, you might be trailing, let's say, your stop loss again and again. So you have no risk, you have managed your risk, and you are placing your position into profits and more profits and more profits. Personally, I don't really like to do that, but it is something that absolutely works. The third thing that you have to consider, and this will sum up everything that I wanted to talk about in this video, is to always stick to your trading plan. As an example, and as I said today in the community, where I show various strategies of how to enter, I explicitly say stick to one type of entry. So as an example, if you are entering on a pending order right here, stick to entering to pending orders. Number two, if you are entering with a pending order right here, stick to entering at the 50% level with pending orders, and only to that. If now you are identifying other levels that I talked about again in the premium community that you are expecting price to retrace to, then only stick to this thing. Do never mix things up. It is gonna confuse you, and as a result, you are gonna be putting more risk on the table than what is needed. Furthermore, it will be very hard to manage all of your positions accordingly. I forgot about part 4 because I want to talk about number 4 as well. This is gonna sum things up, and you might not see it as directly correlated to risk management, but it does absolutely have to do with risk management in trading. This is, and I will write it down, stick to one currency pair or cryptocurrency pair, whatever you want. This is extremely important. Or what you can do, you can, for example, go for Euro USD, okay, you can go for AUD USD, this is an example, and you can go for GBP USD and identify which of one of those does the best movement in a particular situation, and then you can, for example, choose between the three and trade one of these per time. For example, in this occasion, here GBP USD was another trade that we called. Just stick to one of those. If you like those pairs right here, those currency pairs, just check out which movement in your opinion gives you the biggest risk to reward, reward to risk I shall say. And for example, here you see 10.15 to 1, and as we said, of course, you can close your partials here, but here you see that we have a 4.7 to 1, which is almost hit as we speak right now. Price action is playing live, and if you go ahead and become a part of my premium community, you will see it with dates and times that I have indeed talked about these trades. So the members who are already part of the course, they have already seen those trades. So stick to one currency pair. Now, if you want to trade Japanese yen pairs and you have 3 of them, Euro Japanese yen, AUD JPY or GBP JPY, go and check out which one of those, backtest all of them of course, see which one of those gives you the best movement in a particular time, and then go ahead and place a trade only to one of them. This is very important information. This is how you will be able to reduce your risk and manage your risk in the long term. It is very, very, very important advice from me to you, and we almost hit the total profits as we speak right here. And I'm pretty convinced that this is also gonna smash this target. If it does not, it doesn't matter. It is your personal risk management, how you want to manage, if you get partials here, and then you can target your overall area. But the ultimate area that we are targeting in the course is this area down here, a 32 to 1 reward to risk. This was our today's video on how to properly manage your risk in trading. Go ahead and grab your bonus up to $600 on Fairdesk and come join us in the private community so that we can discuss about any trades that you might be interested in. Furthermore, smash the like button and subscribe to my YouTube channel. Turn the notifications bell on. You don't want to be missing any of the free educational content that I'm uploading here on ChrisFX. This is gonna do it for today. Thank you all for watching. Until next time.